what the heck is going on here? All right, after doing my homework on the major cyclicals this weekend, I got a theory. First, many of these sell-side research outfits are run from the top down. In other words, the firm establishes its worldview, the head of research, its global growth forecast, and then the analysts try to peg the companies they cover into that worldview. Right now, the mood on Wall Street is as gloomy, maybe the gloomiest I've seen since the Great Recession, honestly. Even with the averages surging to new highs today, there's a widespread belief that things have deteriorated thanks to the trade war with China, or the endless trauma of Brexit, or the uncertainty over next year's election, even though it's pretty far away. If that's true, then the aggregate earnings estimates are probably too high. And if the aggregate numbers are too high, these analysts conclude that the shortfall is obviously going to come from some of these kinds of companies, the cyclicals. That makes it hard to interpret these quarterly results because the analysts had cut their estimates beforehand. Nobody was looking for anything good, for instance, from this guy. Not at all from Cat. When Cat was trading back at 138, it was in August of earlier this year, Goldman Sachs downgraded from a buy to a hold. It cut the price target from, down to 130, and it was courtesy of a slowing global economy. It really slugged the stock. And then a week and a half ago, that's pretty close to when they reported, Morgan Stanley took Cat from a buy to a hold, trimming its price target to 145 on worries about peak construction and energy markets. As someone who had it from my charitable trust, I gulped when I saw it. I said, oh, no, they got to know something. So when Caterpillar reported last week, even though they clearly missed on sales and earnings with a guidance cut to boot, the stock initially fell about 6% in pre-market trading. That was understandable. It sunk to 130. I mean, the headline number looked ugly, even in the face of lower expectations. But then the stock pirouetted, finishing the day up, less than $1, but up. What happened? All right, management told an encouraging story on the conference call where they committed to maintaining their bountiful buyback and their dividend. Thanks to those analysts who downgraded going into the quarter, the stock had already been softened up, which made it a lot easier for Caterpillar stock to bottom and then immediately bounce right back.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.